And today's guest on the Financial Planner Live podcast is Tom Ham. He is the CEO of the Calton Group and director of Game Plan. He set up his own financial planning business, quickly growing the number of advisors. And today he shares how he did that. We also talk about the power of taking on non-executive directors very early on in a business. And he talks about the types of non-exec directors that he's actually taken on and the impact that they've had in his business and how he basically remunerates them without paying them a salary. And it was a really interesting subject. It got me thinking about non-executive directors in my own business. Tom's a really honest guy and he shares really deeply about his career within financial planning. He talks about some of the things he gets up to when it comes to winning new client relationships, how to become a key person of influence as well. There's something for everybody in this episode. I hope you enjoy it. Tom, thank you so much for joining me today on the Financial Planner Live podcast. How are you?
I'm great. No, Sam, thanks so much for having me. No, thrilled to be here.
No problem at all. It was great to get you on the podcast. Funny enough, I think I could talk to you all day long. I've had a good conversation with you in my pre-podcast exploratory chat a few weeks back, and then I obviously got super duper ill, so I had to cancel the podcast. Anyway, I'm back in the land of the living now, and we've already gassed for about 20 minutes before the start of this podcast. So, lots of things to talk about. You're obviously somebody that enjoys a conversation.
Well, I think to be successful in this profession, you need to enjoy a conversation. You need to have a curiosity about people, because it's about people, not money. So I say to people, if you're not curious about other people, then it's probably not the right one for you. I can quite happily spend all day just nattering to people and hearing about them.
Oh, fantastic. And you're absolutely spot on there. And I think, I had someone on this morning and I mentioned to you, he's a young guy who was very technically sound, like he's chartered, 24 years old, went to university. Whilst he was at university, did his level 4 qualifications, did a finance degree, and had a placement within a financial planning firm. And of course, when he came out, he was full to the brim of all this technical information. He worked as an analyst as well within that placement. And when he went into his first client meetings, the client said, you bored me to death.
Yeah, there's a famous story. Well, it's not famous, but there's a story that I think is oft told at a place I used to work at. And my first client meeting there, because it was very corporate and very structured, my first client meeting that was observed by my regional manager took over 3.5 hours. And we ended up going through the client's line of expenditure line by line on their bank statement. And the regional manager had to leave the room and phone the next 2 appointments to bump them back, and eventually just cancelled the next one. And then we went to the other one sort of 2 hours late or something. And as we walked out, he went, so how do you think that went? And I just said, well, crap, wasn't it? I was appalling because I lost control of it. And actually we ended up talking about how much they spend on papers every day and just got completely into the detail of it because that's what I thought they wanted, because it was super corporate and that was the vibe. That was all very humiliating and amusing in equal manner.
And that's it, exactly that. These learning experiences you go through, you've almost got to kind of fail, haven't you, to find out what's the right way to interact with people and the quickest, easiest way to build rapport with somebody. It's an interesting point, actually. I'm going to throw a question at you at this stage, actually, around that part of the process. What do you think is the quickest way to build a relationship with somebody when you're sitting down in front of them and you're hoping to bring them on as a client within your financial planning practice?
So I think it's finding, there's the confidence thing. You want them to have confidence in you. So, you want to not sound like a salesman where you've got, you've always dealt with everyone like them and you've got one like that at home. But you want to find some common ground between this client that you're in front of and your practice. And chances are, if you have no common ground with the clients that you've helped to this point, then actually you probably should be signposting them somewhere else. So, an advisor was telling me recently, a really great advisor was telling me that this sort of, massive in terms of AUM client walked through the door. It was, bigger than a lot of practices that I've encountered, for just this one guy. And he said, look, you're too big for me. You're too much of a risk to the business. We need to find you another way of working, of getting advice, and he was brave enough to say that, whereas actually a lot of people will just sit there and go, yeah, no, I have loads of people that have the net worth of Liechtenstein and I can definitely look after you. So it's the finding a bit of common ground and building confidence, allowing the client to build confidence in you, I think. That all comes back to people deal with people that look like them. I end up dealing with a lot of people that have similar hobbies and pastimes to me and things like that, because those are I used to be in the Army Reserve, so I have a lot of military clients and ex-military clients and things like that, because we've got a shared understanding and a shared experience.
I think it comes down to that idea of, should you be casting your net nice and wide to try and find clients, or should you be niching down and specifically targeting people, like you say, that you might have common ground with, or at least that you have shared experiences with, where you can be relatable really, really quickly? Do you tend to seek out people like you, or do you feel that you just attract people like that due to the time that you spent giving advice to similar types of clients? What's your sort of strategy around that? Are you a niche focused individual and you search out those military people, so you go into networking events where they are, for instance, or is it like referral side? How does it work?
So I think it's interesting on this. I was at the Landcat conference in February, and this came up, and we had a bit of when I was on the stage, we had a bit of a chat about it. So to me, the niching piece is when you exclude all others. So you can try and, there's the bit where you focus on these clients, on these particular type of clients, and you'll still accept other people if they walk through the door. And to me, that's not niching; it's just having focused marketing. Whereas if you're niching, you're going, I want to deal with ex-military personnel, or people in the military, or other armed or other public service, and actually, Mr. Millionaire, I'm not going to deal with you because you come from tech or something like that.
Yeah.
And I think I said then, and it takes, if you're starting up practice, it takes a lot of guts to niche. And I doff my cap to anyone who sort of says, no, I'm going to deal with this one particular type of person, and to the exclusion of all others, because it's a really brave thing to do. When we started the business that I'm in, I was very much, we'll deal with anyone. We need cash flow, we need clients, we'll deal with anyone. But what came out of it was, so I spend a lot of time. So my social media is full of me doing things like field sports, and being on relatives' farms, and so you then tend to get a certain type of people that engage with me through there. And then I have a very good friend who is an accountant who works in the estate planning space for landed estates. So again, and I can have, I come from a mining village in Yorkshire. However, my in-laws and things, different background, that's their sort of background. So having been involved in that side of things through extended family, there's a shared experience there. So we naturally found ourselves drawing ex-military personnel and current military personnel, along with sort of farmers and landed estate owners, because we just we don't like saying I look like them, because I don't have an estate or a farm, but you know what I mean. We look like them, and there's that shared experience. So a lot of it was organic. There was a bit of networking with the military side of things. I'm an ex-cavalry soldier, so in the Edinburgh Cavalry Club, and a couple of other sort of things like that. So naturally people would gravitate to you through there, those sort of things. And then the rest of it was just sort of social media and people seeing you and going, oh, I think we have a common ground. I think I can share this experience with you, and you'll be able to help me. We're now getting a bit more intentional about things over the last sort of 6 months or so. We've really started getting intentional with the marketing of the business.
Very nice. I think that's what you're giving there is a really great example of being a key person of influence within a specific network. And I think if you, as you say, look the part, fit in, as in you have some understanding or awareness of what, say, farmers are doing, right? Yeah. And you position yourself as a bit of a financial advisor to the farming community. Is there anybody else positioning themselves as a financial planner to the farming community? And if there isn't, then you lean into that, and you kind of lean in off the back of what the fact that you've got family within it, and it's relatable. And it's almost the enough to be able to be let into a circle of trust. And when you're that specialist within that circle of trust, and you start helping people within that circle, within that niche, become that key person within that key person of influence within that niche. You're then sort of Dave, you got to meet Tom, you got to meet, and all of a sudden you're being passed around all these different types of people. And your aim is to try to find, isn't it, other key people of influence within that space who are influential that can then pass you around and introduce you in the right way. And I think that's a really good tactic. It's like me being a recruitment consultant. I'm not a financial advisor, but I know a thing or two about what the financial planning profession is. But one of my expertise is I also know what recruitment looks like. And I know what's good. I know what's bad. So I can help companies hire. I can give people advice about how to get ahead in their career. So therefore, I use that expertise. I use my understanding of financial planning to create a podcast. And therefore, bam, I'm in there. I'm in the circle of trust. And now I'm the trusted advisor to the financial planning profession. I'm not considered the demon devil recruitment consultant anymore. And I think sometimes when we're looking at ways to market ourselves and position ourselves within a specific area, look at what you have and how you can use to give that back to that circle, that community. And then once they understand that and it's relatable, you're in, and they pass you around. And ask, isn't it, as well, as how many times have you asked for referrals? How many times have you asked to be recommended to somebody else that they might well know, or an event you've been invited to, or something along those lines?
So it's interesting. I'm really bad at asking for referrals.
Are you?
I'm like the worst at it, but it's that thing of, I try and give a whole load of value.
Yep.
So there's a thing about, so there's a thing called agricultural relief that you can get for farms, and you can have it on, and if it's being farmed by someone else, you need a particular type of agreement, and it has to be written in a certain way. Now, I don't know how to write that agreement, but I know that it has to be done in a certain way. So when I'm sat with clients, I'll say, okay, so who wrote your contract farming agreement, and has it been written with claiming APR in mind? And if clients say no, I then know enough to say, well, actually, I need to introduce you to someone, who can just cast an eye over it, and I know a couple of people just cast an eye and go, yeah, you're cool, or actually, this is not written in such a way. You need to do it this way.
Yeah.
And I think having that, and then there's no, I don't make a charge for that. It's just me trying to be helpful at a drinks party or anything like that. And then eventually, someone will come back. So we had something where we did a really minor bit of pension planning for someone, and it was a real minor piece. And we mentioned during the conversation, these are the other things that we do. And then I'd mentioned in passing, oh, well, if you're doing the inheritance tax piece, make sure you look at your contract farming arrangements and things. Next thing it wasn't next thing I know at all. It was about 18 months later, get a phone call saying, right, accountants, I'm not happy with the accountants that we've been working on this for us. Can you come in and do it?
Yeah.
And I knew at that stage I couldn't do the whole thing. So I said, well, I'm going to come, but I'm going to bring my friend with me from a different accountancy firm, and we'll talk to you together. And at the end of it, we'll say, and I knew walking in there that actually there might not be any work for me. There might not be anything in it for me. It might have been a wasted 3 hours, 3/4 an hour there, 3/4 an hour back, and then an hour and a half with the clients. It might have been a wasted sort of 3 hour trip, and my pal might have got all the work out of it. But actually, we went in there and I said, okay, there are some financial planning bits that we need to do alongside the accounting piece. We landed the bit of business.
But that's a great example of partnering with other experts from other areas and other fields of support, of other expertise, right? So if you've got somebody in your back pocket who's an accountant, then even if you bring that accountant along with you, and you're sitting there and listening to the accountant do their thing, right? Explaining the ins and outs of what that proposition looks like and how that accountant, if they did it the right way, could help that farmer. Now, for you, that's an education piece, isn't it?
Exactly.
Because you get to sit there and learn and see and observe. So when it comes to the next time you have a conversation with somebody, you very quickly can establish whether they have something or not. And there is a need. Therefore, you can say, I've got somebody, I can pass them across to you, and they'll be able to help you. Because when you show that value to somebody else and you show that you can give them something that doesn't make you yourself any money, it's not about you. People respect you more and people trust you more. And that's why, especially around this day and age as well, that's why you see so many people giving free content away, because when we give stuff away for free and it's adding value to somebody's life, they're going to want to deal with you in the future. And they remember that. But also as well, we can't forget the power of passing across to that accountant, because that accountant's going to love you. Aren't they? They're going to think you're fantastic. This person knows what they're talking about, and they're referring me business. So guess what? I'm going to do exactly the same when I come across somebody who needs some complex financial planning done that can support what I'm doing. So therefore, there's that building of those cross referral networks, isn't it?
Exactly.
Like having that strength, having that network of people around you. I love having somebody who's an expert in marketing, somebody who's an expert in video, and that's why I'm building all these plethora of different services, because it's all about sort of very quickly cross-referring somebody over into somewhere else, and creates that kind of whole kind of business support model. And then at some point you get it back. You get it back in spades. Exactly. So lovely. So do you, you've obviously been running your own business, right?
Yeah.
Yeah. So let's talk a little bit about that. So this podcast is very much geared around careers within financial planning, and you get people listening to this podcast that are in the profession, peer-to-peer learning. So you might have a financial advisor thinking about setting up their own business, but you might have somebody who's a graduate thinking about becoming a financial planner. So let's just talk a little bit about how you, first of all, got into the financial planning profession to get to the level where you are right this second.
So, like everybody, I think, it's great to see people coming in, like the chap you were talking about earlier, the graduate who's obviously very intentionally come into financial services. A lot of us sort of my generation fell in, because nobody really knew what a financial advisor was when I was when I were a lad. So I went to university to study civil engineering. Studied at Coventry but played ice hockey to a reasonable level. I was involved in the sort of setting up of the University Ice Hockey League and various other things, and was around that sort of hockey scene for quite a while. At that point, my grandmother died and left me a bit of money to do something silly with. So I decided I didn't want to be an engineer anymore. So I used that money to sort of travel around, job around, and try and get a job playing professional ice hockey. Turns out my skill level was nowhere near what was required. It didn't match my enthusiasm. But then sort of realized I needed to put food on the table at some point. So got a temporary job with AXA Equity and Law, or AXA Sun Life, I think they were at that point. And it was, the guaranteed over 50s plans that you see advertised during the day. So my first job in financial services was I was the guy that you rung up and chased if your DVD player hadn't arrived when you'd paid your first premium. Right. And after about 2 weeks, so I'm a bit of a git. And if I think someone's taking the mick, I'll try and hunt it down. So I was the one that when people come through and I go, look, we've sent 3 DVD players to you, I'm not sending another one. I would email Royal Mail and say, please, can you send us the scans of the signature? And then I'd match the scan of the signature, because these people were so stupid, they wouldn't use a different signature, against the signature on the application form. And I ring them up and say, look, I know you're at it. You can either, we don't want them back, the DVD players back, but you can, stop trying to do this. Or we'll call the Rozzers, and I'll leave it. And after about a week of that, they turned around and said, look, you've clearly are reasonably competent and a bit tenacious. Do you want a full-time job in the pensions department? So I moved over and worked on the old AXA pensions, whole of life plans. I think there's investment bonds as well. Did a load of internal training and all of that. After a while, I think I was there 2.5 years. Then moved on to the sort of this side of the fence from provider land. And I was a client technical administrator with a business in Birmingham for a while, again, for about 18 months, 2 years. Then I took a bit of time out because I got the job coaching the Great Britain Paralympic ice hockey team. Job implies some sort of financial remuneration. It was very much a labour of love. And I mean, it was to the extent that I used to use my, you'd claim your petrol. And at that point, I think it cost me about 15p to run the car, but I got 45p per mile. And I'd live on the 30p per mile because I was doing about 1,000 miles a week at one stage. So that was how I got a salary. And that was a great experience working with, a load of people that have been through real adversity. And it made you just go, well, whatever I'm facing probably isn't that serious. We can probably grizz it out. Then I did that for a Paralympic cycle, and then was sort of come on, Ham, you're coming up to 30 now, you probably need a job that pays actual money. So ended up with a small business in Edinburgh. I'd moved up to Edinburgh. I was dating a girl in Edinburgh at this sort of in that period, so I'd moved up to Edinburgh, and started working with a business called Walters and Sheck in Edinburgh, and a guy called Stephen Walters, who was absolutely fantastic, really great guy. Trained me, instilled a lot of really good. I always say all the good stuff, or in my behaviours, came from the ground, and I got with Stephen. Ex-submarine officer, really interesting guy, and he, was sort of charging fee-based financial planning before fee-based financial planning was a thing. He was doing cash flow modelling before cash flow modelling was a thing. So it was this like 13,000 cell spreadsheet that we had that he and another guy there had built. And sort of had tested by some PhD mathematician, and is essentially cash calc. It was what we know to be cash calc now, and they had built it, and it was so building cash flow models would take a day to do it with and test it and things. It was great fun. So it was there for I think about 5 years, and I only left because I think Stephen has got a great business and it sort of suited him, and and I was kind of I've always been quite ambitious, and I think it was just not going to be a good fit long term, and I think also I probably needed to learn off someone else as well. So so I still think he's absolutely fantastic, and we meet sort of periodically to go for lunch. And I think whenever something good happens, he gets a message off me still saying thanks so much. This wouldn't have happened if we hadn't got this. I hadn't got the training from you. And then from there, I had a bit of a tricky year. So I went self-employed through a network for a year, which was it was a bit tricky. It was the first year post RDR. I didn't really get the sales side of being an advisor. Didn't really appreciate it and how tricky it was going to be. Also, a bit of I took on a block of clients in Dundee that was, so good. The guy didn't want to do his level 4 qualification, and instead, got me to come in, and he was going to keep 20% of whatever I build on top of the 20% of the network we're taking, or whatever it was, and all this. And great guy, he's a great guy, but it was slightly, what I was walking into was slightly oversold. Essentially, it was 2 filing cabinets at the back of the room, and it was go for your life. It was there for a year, and alongside this, I joined the Army Reserve, so I was doing a lot of reserve stuff, and went and worked with a business called Wealth at Work, which is a discretionary fund manager. So it was sort of one of 2 people covering Scotland at that point. Again, it was a good year. I think it was. Were I not in the army as well, I might have done a bit longer, but I think I did something like 32,000 business miles on top of 80 days man training days in the Army Reserve. And it's kind of, and very sadly, I think around that time, my first marriage sort of fell apart because I was hardly ever there. So quite reasonably, my wife was kind of, I may as well do my own thing. And then ended up at a law firm in Edinburgh. One of the sort of biggest law firms in Scotland, on the wealth management team. But I was there for 6 years before I set up my business. That was great because I'd done my DFM certificate through the CII and the stockbroking certificate as well. So they brought me in and put me on the investment committee, which was all about, there were advised model portfolios when I went in, but we sort of were closing those down as I joined the business. And then we went sort of to multi-asset funds. So I got the fun job of interviewing fund managers and, turning the screw and asking why they've done this and what they've done that, and all the rest of it. I also helped bring cash flow modeling into that business, which I was really pleased with, and moved them towards a more index approach. Sort of when I left the CIP, when I joined, there wasn't such a thing as a CIP, but when I left, the centralized investment proposition had a lot more sort of index options on it than it did when I joined, because there weren't any when I joined. So it was, that was a really good learning experience in how to run a business at scale. Now, I wasn't running that business, but I was involved in key decisions and things and sitting around the tables. So it was a really, really good introduction to what does good look like, and and how can you make things work in a financial planning business, and what does bad look like. Not that I'm calling the firm bad, but you see things where would I want to do it like that? And when you're interacting with other firms as well. So yeah, so then that was start of 2021, mid-COVID, go off, leave my very secure, very well-paid advice job, and set up my own business called Calton Wealth Management. Literally in not this room in that flat, but the room over there. There were two of us at the start, and a few clients sort of found me pretty quickly and locked it and jumped in. But otherwise, yeah, we've been on the roller coaster ever since.
Fantastic. Thank you so much for that career overview. There's a lot to pick apart there.
Sorry, I felt like I was rambling quite a bit in the middle.
No, it's fine. It's good. And this is okay because you've got that varied background. And I was having this conversation with I've had a couple of younger guests recently on the podcast. I'm not saying that you're a young guy. You've got more experience.
Younger guests. We know it's okay, Sam. Don't worry.
Yeah, got more experience than some that I've been speaking to. And the thing that comes up a lot with inexperienced individuals is this reluctance to go and get experience, right? It's this reluctance, this feeling that if I leave this job and go to another company, for instance, that I'm being either disloyal to that firm, or there's a lack of confidence and the worry that if they go and leave and join somebody else, it's going to look bad on their career and their career history, their CV, and no one want to hire them, right? And I'm just kind of trying to reinforce in them at the moment that the financial planning profession is at a point where there aren't enough candidates in the profession. So my advice to anybody who's coming into the profession is get your qualifications as quickly as you can and get your experience as quickly as you can. And every time you've got a year's worth of experience under your belt, get out in the market and see what the market's doing. See if there's any opportunities out there where you could move somewhere else, because I know loads of people that go from one company to another, to another, to another, and their salaries have gone up far quicker, as have their level of responsibility, because they are seeing things from lots of different perspectives from lots of different companies, and it's never had a negative detrimental effect on their business. Now, you work self-employed, right? You went from being in a position to going self-employed thinking, right, I'm going to have a crack at this, realizing that it's a hell of a lot harder from a BD perspective than you probably envisioned to actually happen. That was great learning experience to fail, if you like, or to not be a success as you thought you might be in that position, but it led you into another employed option where you then became part of an investment committee, and then you could see, couldn't you then, being part of an...
It's funny, sorry to jump in, but it's funny on that. So I applied for the job that I ended up in 2 jobs before. So when I went self-employed, I applied for the job at the law firm in the Perth office, and I didn't even get a call back. Yeah. And then I did a year self-employed and a year with the DFM. And then the guy they had employed, it was an internal thing, he was leaving the business. So I reapplied, and they were like, "Oh, this is great. You've got this experience." And, and I joked with the sort of the senior manager in the business. So I said to him, "You didn't even interview me or speak to me 2 years ago." He said, "Of course I didn't, because you said you'd been a trainee advisor / power planner in a 3-4 man firm." He said, why do I, with no business, experience, no experience of writing business consistently. He said, and you showed you got guts to go out and go self-employed. And then you got taken in by a business that we know and respect, and you did a year there in what is basically a sales role. So you've had 2 years of really good sales training, and alongside that, you've gone off and done your extra, certificates. And then you come to us and we're like, great, now we've actually got a senior role where we need somebody, because somebody in the investment committee is leaving, as well as the guy in Perth. So come into the job in Perth and do the role on the investment committee as well. Brilliant.
Yeah, absolutely. And people do, like you say, people do respect that. And I think what people do like to see on a CV as well, on a career background, is somebody that has, as you say, gone off and had a go at something. Whether they failed or not, it doesn't matter. Whether self-employment didn't work. But what people love to see is they do also like to see that somebody's been in a role where they are forced to go out and actually sell and actually have to develop business. It's that's one of the biggest strengths to have on a CV, I think, when going into a financial planning role, even if you're going in to service existing clients. Now, there will be a lot of vacancies in the future where it's servicing existing clients due to the exiting of lots of advisors, people buying up client banks, the distribution of those clients, the level of service required to each of those clients. So there will be these kind of hybrid or just servicing type roles for these trainee advisors. But anybody that's got that sales experience, and what one of the best places to get sales experience, I think, if you're going to go into financial planning as well, is in like a DFM, is in a product, is for one of the product providers, where you're going out and you're having to sell what the product is to, say, brokers. So I think this is a really good background that people should look into if they are considering going down a financial planning route. You can go straight into financial planning, don't get me wrong. And if you're in a firm and they've got great training and development and support and they're doing the right things with you, fantastic. But don't overlook good quality sales experience. And if you are a second careerist, listen to this right now, and you've got 5-10 years worth of experience in sales, come into financial planning, you're going to absolutely kill it, because that's the hardest part, and that's the skill set that's lacking the most at the moment within the profession, is people who've got relationship building skills. So that's really cool. So you went into a law firm then. Did you enjoy working in the law firm? Was that an interesting area to work?
So I did. I mean, there's always a tension between financial planning and legal in a law firm, because the two departments think differently. They just do, and that's not being derogatory towards either side. But the focus we found a lot of the time was on the transaction on the legal side, whereas ours was about the hopes, goals, aspirations. And so it's different, and there's relationships that needed to be managed, because I heard, I'm not talking about my business here, but or the business I worked in, but I heard horrendous things of people being having things said to them about well, you don't need a degree to do your job and things like that. So I mean, I mostly had a very happy time. Yeah, okay, there were a couple of the partners that were tricky to deal with, but I can be tricky to deal with on my off days. I'd say that to people joining the business. Look, I'm sunshine and light 98% of the time, but it's really hard running a business, and there's 2% of the time when I'm a bit grizzly. So yeah, it's interesting dealing with the different departments. So I used to get on a lot with the executive team. I used to do a lot of work with them. The family lawyers as well. I do a lot of work with them. So I did a few divorce cases and things as I was going through my own divorce, which was quite interesting. So we talk about shared experiences. So yeah, it was, and I'm really pleased I did it. It gave me, there was nowhere else that I would have got exposed to that seniority and that experience that quickly. So yeah, it was a great career move. And again, if I hadn't have, when it came to getting direct authorization with the FCA, I was able to point to things that I'd done, projects that I'd worked on in that business that helped convince the FCA I was a competent individual.
And it's also great experience in respect culturally. So understanding culturally how law firms operate, how they work, and what their thoughts and feelings are around financial planning. Now, I've placed many a person into a law firm and into an accountancy firm. And some of the tricky things we came up against was things like, because accountants and solicitors traditionally, it's fee-based, right?
Yeah.
By the hour, etc.
Yeah.
When they then set up these financial planning operations within inside their practices, they're trying to build it. There's a kind of there is this divide between the legal team and the financial planners, where they often see like the financial planners of earning too much money too quickly. Therefore, they try to keep them into the structure of what it would be in legal, but it doesn't fit that way. They're often pressurized and put down more in those environments historically. I don't know what it's like now. So you would tend to find financial advisors would be a bit less happier in those environments, and they felt a bit more downtrodden, like they weren't considered as valuable as the solicitors. And like you're not really a profession, you're not really a professional, and you shouldn't be earning as much money as you should be earning. We should be capping you, even though you're bringing in a shitload of cash.
Yeah, and I think that I'm not for a second going to complain about my paying conditions when I was at law firm, because I was, highest paid job I ever had, and I didn't delete, and that's not being boastful. It's just they had a fair salary structure, and I'll be brutally honest that for employed advisors in our business, it's a very similar salary structure, because I sat there and said, well, I didn't have any worry about how I was paid there, and. It is, but then I remember I got approached by a recruiter for a job in a law firm around the corner, and they said, "Oh, I'd like, do you want to come and talk to this law firm?" I said, "Well, not really." And they said, well, I said, "Look, I'm pretty happy." And they said, "Oh, it's really good money." And I said, "Yeah, I'm pretty comfortable where I am." And it seems a bit of a nose to move 3 doors down, and and they said, but it was a good firm, it was a well-respected firm. And I said, well, look, you can send me the spec if you want, but I'm pretty happy where I am. And they showed me it, and the salary was not even 2/3 of what I was on.
Yeah.
And I just said, look, I'm really sorry, but why would, and they said, well, look, you'll be working for X firm and it's really prestigious. I said, well, my firm's
Yeah.
prestigious and they pay me because this is what happens if I bill more? If I, because and they said, oh no, what happens if I bill? And I told them what I was billing where it was. And I said, what happens if I bill that there? And they said, oh, you'll get like a discretionary £5,000 bonus or whatever. And I was like, this sounds no. And they started the conversation with, we're having trouble filling this role. And I ended it with, I can tell you why you're having trouble filling this role.
Yeah.
Like you're not paying enough. We're advertising a job where somebody would be remunerated fairly.
Yeah.
And yeah, it was. So yeah, I still think that is somewhere in some places. I mean, the self-employed opportunity I had was part of. I was working out of an accountant's office, and that was the same thing. I used to in the accountant's office. I used to get comments like, "Oh, it's criminal what you guys earn."
Yeah.
Right, but is it? Is it though? I mean, I didn't necessarily think it is. Depends what you're doing. I mean, if you're charging 5 + 2 and and on £1 million, then yeah, bloody is criminal. But if you're charging what I would class as reasonable fees, which we do, and what we were doing at the law firm, I mean, we were actually really competitive on fees on the law firm. We charge a little bit more now than I used to, because I'd look at it and go, well, actually, I think we're sort of closer to average. But still, it was all about percentage of revenue and things like that. And I think it's the right way to do it. You've got to keep people incentivized. Otherwise, that's when people sit there and go, I could just do this myself, and they go off and set up their own firms.
Yeah.
The only reason I left to set up my own firm was because we had a big change in personal circumstances. My wife was critically ill. It meant that we wouldn't be having a family. It put a time clock on things, and it caused conversations like, well, what would we like to do to make a difference? There's the life planning question, the George Kinder question of, what would you do if you only had 5 years to live and you had good health and then you were going to drop off a cliff? What would you do with the 5 years? Well, we had to ask that question. And we also had to ask the question of what happens if you've got not very long at all. And we had to go through all those questions. And, the result was actually, my wife's a surgeon and does research into a disease called endometriosis. So that's her thing. And my thing was helping as many people as I could. And I just thought, actually, I want to do this my own way and on my own terms. And that was the reason I left. It wasn't because I wasn't well paid or I felt, badly treated. I just sort of, actually, there's a divergence here. And if I don't scratch the itch and go off and do it, then I'm going to feel annoyed. And then
we sat there in resentment and thinking you could have done something differently. Yeah. And so, okay, well, that's a big motivator, isn't it? That's a big motivator to ask that question and to actually be faced with that question as well, especially if your partner is also going through some illness that might, is life-threatening. You get to a stage where you're thinking, what's important in life and what do I want to do? And should I take some risks and should I do things? But the thing is, you chose to set up your own business, right? And one of the conversations that we had when we first spoke was you did it to make a difference. Yeah. So when you've set this business up and the term making a difference, so what does making a difference really mean to you when it comes to financial planning and running your own business? What is that sort of driving force?
So right from the beginning, I've been very sort of planning based. So I and as I said about the sort of 13,000 cell spreadsheet that Stephen built, right from there, I've been planning based all the way through. And I think that I'm pretty good. I don't want to sound boastful, but I think I'm pretty good at doing the advice bit, and I've seen my advice make a difference. I've also seen what bad advice looks like. I've also seen people, in my view, ripped off and left in poorer situations than they hadn't have been, if they hadn't taken any action. So I sort of sat there and went, well, look, I was looking after, pardon me, I think I was responsible for something like 240 clients at the law firm, of which sort of 150 were annual review clients. And it was me and an amazing power planner called Jen, who is now, she joined me as a trainee there and was amazing, and now has gone on and she's now the sort of power planning manager at that business, this multi-million-pound business. So I'm, that to me is one part of making a difference. I've helped. She's done it, don't get me wrong. I'm not taking, but I helped coach her and helped and helped her have helped her have a good, really good start in a career. But on the client side, I was sort of sat there going, well, look, I can really look after, 100, 150 clients really well with Jen's support. actually, if I go off and set up a business that does things in my way without wanting to be too hubristic, well, maybe we can help 200 clients, maybe we can help 500 clients, maybe we can help 1,000 clients, maybe we can help 50,000 clients. I don't know what the number is, but I'm kind of, why don't we just do that? Because actually, what does it matter? If I fail, I am still a employed advisor. I'm still a good advisor. I will find employment. It's going to be all right. We were fortunate. Okay, there's that question of, if I can't pay the mortgage, can you pick up the mortgage for a few months? But like you said, there is a shortage of advisors in the market, and every week, even now, I own my own business, and quite publicly own my business. I get emails going, "Are you interested in an employee financial advisor role?" Not from you guys, but I'm kind of like, no, I'm probably not. No, actually, thank you. So it seems a very expensive way of doing it. So it was that thing. So we set up Calton. And at the start there was sort of two of us and 30, 35, 40 families that we're looking after. And now we are, by the end of August, when we've had some people settle in and clients drop in and things, we will be 7 advisors, excluding me, 16 total headcount, and including a couple of sort of part-timers. And we'll be looking after just shy of 1,000 clients.
Wow. That's rapid growth. That's rapid growth, isn't it? Really, that's really rapid growth.
Yeah, no, it is. Yeah, I mean, it's quite funny. I was chatting to someone. I was down in London a couple of weeks ago, and we work with a business called Saltus on part of the investment proposition. And I was chatting to one of them, and he sort of said to me, he said, "Look, 18 months ago, when we were sat in the meeting room talking about the business, how many clients?" He asked about AUM, but we don't talk about AUM publicly because, as I famously said elsewhere, we don't measure willies. He said, how many clients are we looking after? And I said, at that point we probably had about 100. And he said, how many have you got now? And I said, well, by the time everything's settled, it's somewhere between 900 and 1,000. And we were just kind of, okay, well done. I was like, yeah. It's pretty. I'm having a moment. I think the end of August will be a moment of stop and reflection and just go, right, because at the minute we're in the thick of getting everyone bedded in, getting the new advisors bedding in, getting the new clients bedded in, making sure everyone's happy, making sure the processes are all fine. And then end of August, I'll probably sit down with an alcoholic gin and tonic and go, all right, that was a summer. And then we'll go again.
Out of interest, I mean, that is rapid growth. That's, it's not common to come across that within financial planning. I mean, the average size of a financial planning firm in the UK is about 5.
Yeah.
You've gone past those numbers.
Sorry, is that 5 RIs or 5?
5 in total.
Oh, right,
5 employees in total. Yeah. So so you've obviously you've surpassed that. I know these can be often, numbers of employees can often be vanity matrix, but your AUM and your clients you've got, families you're looking after, reflects the number of hires that you're making are also bringing in assets, or bringing assets with them, and assets under management is growing. Now, that's a really hard thing to do. One of the things a lot of financial planners who run a business, A, are financial planning, and B, trying to grow a business, right? It's time consuming, it's hard. Recruitment can be difficult. Finding the right person to come in can be difficult. What's the secret sauce that you've got then, Tom? What are you doing differently to everybody else?
Well, there is no, it's very kind of you say, there is no sort of secret sauce. There's a lot of luck in this. I think there's a lot of luck, and you've got to recognise when you're lucky, because you've got to have luck to be good. I've played enough sport. I've seen enough people get injured, on the rink and, in different settings and stuff. So you've got to be lucky to be good. I think we've adopted the New Zealand rugby no dickheads rule, and that applies to clients and employees. And I think that shines through in what we do. And it's very much, and I'm honest with people. I go, look, you join the business so some of those advisors are, all except one of those advisors are self-employed. So we've got the first employed advisor starting on the 1st of August. Absolutely great guy. Can't wait to announce it because he's a bit of a name. And I can't wait for him to come on and put it on LinkedIn and things. Because I'm thrilled to have got him. Really, really clever guy, and he's pretty well. I know he's really well thought of, because the few people that we've talked to him about have gone like, oh right, punchy, well done. The other folk are there's a couple of people who are sort of self-employed, and at some point in the future will exit. But then the other people are all people who are sort of, it's part of a plan, a transition plan, and that plan might be a year in one case out to sort of 10 years, and it's all about, and the problem that the sort of, I don't like saying consolidator space it has, because then it makes me feel like I'm a consolidator and I'm not. But it has is this thing of, we want assets and we want fees, and actually we want to do as little as possible for the job. And that's what it is. And there's a lot of them that will buy your book, and they will. So there's a couple of clients that we've picked up recently. Their advisor quite blatantly sold them to a national consolidator. Very upfront with them, said, this is how much recurring revenue I'm getting for you, blah, blah, blah. I've got a bit less for you because you're over 80. And I was kind of like, and they were telling me, I was like, Christ, I mean, I admire him, like, fair play to him. And they turned around and said, oh, we've got some money in. We'd like to do some stuff with our ISAs. And they said, oh, you've got to do it online. And that firm was taking a fee. They were taking an ongoing advice fee. And they said, you've got to do it online. And the clients were like, well, we don't actually have online access because we're in our 80s and, we live in the middle of nowhere in Scotland, so we don't have great internet. And they were like, well, you've got to do it online through the app. Oh, okay. So anyway, in sweeps me, I get invited in to talk to them. And I'm like, yeah, fine. We'll take on everything for you. We'll look at it. It turns out it's an expensive platform, crap portfolios. So like, we'll deal with it all. And tell me, you mentioned the other money. Oh yeah, we're selling the farm, all parcels of land, and it's kind of like, right, okay. So this consolidator not only had these clients, trying to do the ISAs. Actually, if they'd have said, "Oh, tell me more," they'd have got to do the whole estate planning piece. That have got to do, because basically these clients then sit there and go, what do we do with this wealth, sudden significant wealth that's coming in? How do we plan with it? So we've added a whole load of value there. And what we're saying to advisors is, look, if you join us, do have a plan. Might be it might be a year's sort of transition. It might be 10 years transition. But there's different waypoints. And at the point at which we both agree it's relevant, we will hire the advisor that's going to replace you.
Yeah.
Or if there's 3 advisors in the business with a bit of space with a bit of capacity, and you think that person would do well with those clients and this with those clients, you can divvy the clients up, and then you'll spend a year doing a handover, and then you can leave, and then we pay you out, and then effectively they retire knowing that their clients are being really well looked after. We have security because we know that advisor is retired and he's done a big handover with the advisor whom he's been spending a year. So we might have had 2 meetings with a lot of his clients going, this is Susan, she's the best, I've picked her to look after you, she's going to do great. And at the end, and also they might have been dealing with us for 5-6 years. So are
those advisors employed, or are you sort of targeting advisors that are currently self-employed?
So the advisors that join us, it's generally, it's generally at the moment it's been self-employed advisors, because obviously if someone's employed, we respect, if someone, the employed guy who's coming to join us, it's very much he's had the conversation with his employer about, okay, which clients is it okay, and what client, and we don't want anyone to rip anyone off, because I get pissed off if somebody left us and broke covenants and things. But then again, so our covenants are probably among the most generous in the business, because we recognise what happens when people leave. And
you've got to be, and I think as well, if you are flexible on that and you are, like you say, generous on that, I think people trust you more anyway, because it's like they're taking a risk, aren't they? Let's say someone's self-employed and they are thinking about, you're sort of targeting the advisor who's thinking about their exit, right? Mm-hmm. So if I was setting up my own financial planning practice, of which I'm very interested in doing, I don't want to be a financial advisor, but I love the idea of building a business. Yeah. Mine would simply be, I'm going to go out and find 10 really good advisors that are in their 50s, maybe early 50s, and have got however long they want to work for, right? Yeah. If they want to work until they're 65, they can work till they're 65. But the idea of it is to create a succession plan for them that is going to be worthwhile. And the proposition itself will be modern. The proposition itself will be useful to their clients, useful to their clients' families, and it will be some coaching element in there, a new modern type approach. And when the advisor comes and they think, wow, do you know what? This is the type of practice that I wish I had, or I wish I was part of, or I'd feel comfortable passing my clients under. And then underneath those 10 clients, the idea is to have 10 trainees or 10 new advisors, maybe like in their 30s or whatever, and they're looking to establish themselves. And I say, look, over this period of time, we're going to continue this model. We're going to rinse and repeat this model. And the idea is that you've got one advisor that probably could service, say, 2 of the existing senior advisors that are looking to exit. And it's about building the confidence between the 2, the transfer of those clients gradually, because you want to try and get that commitment, which will probably take about a year anyway to get the trust of that person before you even start to think about handing clients over and easing that process for them. My point I would get to at that point is when do you choose when do you work out what a fair price is for the succession plan? So when they do decide to exit, do you say it's flexible and you can have an amount now, you can have an amount a bit further down the line, it's going to be 4 times? Do you have a set figure? How are you working all of that out?
So there's a spreadsheet. There's a spreadsheet for everything in life, and there's a spreadsheet that has sort of factors around. So recurring revenue, where it is, and so percentage that's on platform. Because for us, it's a nose if a load of clients join us that have got all offshore bonds with 25 different providers or something, to use an extreme example, and nothing, the cost of servicing that business is quite difficult. Whereas if we've got everybody on a platform, it doesn't necessarily have to be one platform, everybody on a platform that we can access through our back office, that interacts well, that has that efficiency of modern procedure, that's a sort of good score. So it's almost like my father used to talk me through the spreadsheets for tendering for big superhighway contracts. You've got your quality score and your price score. So the quality score is, where are the client's assets, the client ages, how long have they been engaged with the business, what type of business have they done? Is it full fat cash flow modeling and things like this? And then there's the sort of, off that there's a price score. You look at the revenue, and then it down at the bottom it spits out a number. So we just pick up the bits, and so we can, and the price is at the price at the time of transition. So so I was talking to someone, and I was making the point to them that one of the people that's joined, they're pretty sick of running their own business. And I was making the point to them, well, if you join us and we take on all the admin and the power planning and all the stuff about you being away from you being authorized and directly authorized, well, you could actually probably grow the business. And we're talking about a number here, but the number when you get over there, because the average age of his clients is very low, it's still not going to be past a point, because once we get over 70 and then into 80, there's sort of different multiples that come into play. You're still going to be at a point where your clients, your average age is well below 70, but you'll have grown the value of the book. So actually you'll be getting much more than the pounds and pence amount that we're talking about now, and you'll have saved some hassle along the way. And it was quite interesting watching that. Right, great, I'm in.
Do you find that they tend to respond well more to a smaller business that's consolidating than say a large consolidator?
I mean, we're never going to be a True Potential. We're never going to be a Fairstone or something. We will always have yes, we want to get to big scale. I make no secret about that. But more than anything, we want to be Edinburgh and sort of the Central Belt's best financial advice practice. We want to be, we want to be the financial advice practice that when people are thinking about, who is, not that people sit around going, who is the best financial advice practice in Edinburgh, when the Central Belt, apart from other financial advisors, but they go, oh, Calton Wealth, great business. I'd work with them either as a client or as an employee. So the number one aim is let's get there. Let's get our quality score up. Let's get known for having really robust processes, for treating clients really, really well, and clients really, really enjoying it. And then, we can think about scaling, but, significantly. But it's, a few people have said to me, the difference is they're not going to be a number. They're not going to be a number on a balance sheet with us.
Yeah, it's keeping it personal, isn't it? And I think, they've got a relationship with their clients. They have a loyalty to their clients to pass them on to somebody they're just not sailing down the river. Because I suppose there is an element of, look, yeah, you are going to get an exit value. Yes, you've built a business that has a value. And when you exit, you want to try and get a sale value that's attractive, right? That's why we build these businesses. But at the same time, you don't want to just dump them with somebody who's going to treat them like a number and give them a shit service.
Yeah, exactly. That's the whole thing. It's that thing of, we're not just going to sell people at the river and leave them and say we are building a load of online engagement tools and we're building a whole load of tech around that.
Yeah,
we're going to turn around to someone and say, you don't have an advisor anymore. Go on the app and do your stuff yourself. Because some people can't do their own financial planning on an app. The type of clients that we deal with can't do that.
Yeah.
So yeah.
Are you scaling nationally or are you keeping it local?
So interesting. We've got a couple of conversations going on out with Scotland, and I have personal reasons. I'd quite like an excuse to go to Yorkshire more because all my family's in Yorkshire.
Yeah.
So it'd be nice to have an office down that way and a reason to go down there and see advisors and spend a bit of time down there. We came really close to doing a deal in London actually. Which would have been fun. But yeah, we are never say never if the right thing comes up.
Would that be like an acquisition deal or taking on of an advisor self-employed with the hope of then them, buying them out when they're further down the line with your business?
So we actually made an offer to a guy who is a sort of a bit of an advisor rock star. And we said to him, look, we'd love to have you as part of the business. Why don't we do something whereby we support you building the brand and an office down south, and you are the sort of London partner. But he felt he had a load of options, and he got the opportunity to do it slightly differently. And best luck to him. And because you've all got to do. And I think he wanted to own all of something rather than part of something, because we sort of said we'll structure it in a way that you own part of that office. So
would they have been more of an early on in their career as opposed to exit? Close to exit.
Yeah, they're sort of similar age to me.
So that's the tricky part. That's almost like a merger, isn't it? So they're two different personality types, because they're not personality types, but they're two different stages of their career. One is thinking about exit and one is thinking about developing and building. So they're at that point where they've got to look for the best option for them. They either go alone or they partner with somebody else. And it's the beauty parade, I think, on either side is still quite high. You still got lots of people that want to buy, but I think at the buying stage of the exiting side is one based on trust. You come across as trustworthy, honest, and I think people like that. When it's the ambition side and someone's like, they're driven by how much money has someone got in the bank? What are they going to pump into me? Where are they now with their technology? How far along are they? When they say they can help me grow it, where's the evidence to suggest they can help me grow it? So they're looking for more evidence-based, and it takes a bit more time on a merge, I think, than it does on, say, an exit.
Absolutely.
And, it's a trickier one. Very interesting. So you also, when you set this business up, one of the things that you did was take on non-executive directors really quickly. Tell me a little bit about that. Why did you take on non-executive directors really quickly when you started your business, and what benefit have you had from it?
So right from the start, I knew I knew the direction of travel that I wanted. I knew that I didn't want to be sort of just working out of the back bedroom. I'm not being derogatory. There's a lot of one-man bands out there making a hell of a lot more money than me. Because I'm, everything is going back into the business, and the business is my number one priority. And but I knew I wanted to grow a business of consequence. And I don't know, I don't know everything, and I don't know what I don't know. And so, for instance, the first thing we did was bring on a guy called Gary Dale, who's got, he can be a controversial figure. Some people like him, some people don't like him. It's fine. But I it's quite funny. I referenced him extensively, even though I've known him for years. And I said to someone, what would you think? What a client who knows him very well. So what would you say if I said I was going to bring Gary into the business? And he said, I'd tell you that not everybody will like him, but actually, is there a cleverer man when it comes to distribution and financial services? Possibly not. Therefore, what do you want him to do in the business? And I said, well, help with the distribution. And he said, well, there you go. what else would you do? So we have a service, and I would like as many people, and some people don't like the word distribution, and I think, and I get the connotation when it's a life company wanting us to distribute their products, but I have a service that I would like many people to benefit from. I am crap at sales. I am crap at the mass market sort of, the mass bit of the sales and the marketing piece. So therefore, we brought someone in who's spent his whole career. He's the former head of distribution at AJ Bell. He's been senior, a product manager at Prudential. He was head of UK structured product sales for Investec Private Bank. So, and he was at a point where he just left AJ Bell and sort of went out for lunch with me and said, what should I do? And we chatted and chatted and chatted. And I said, well, why don't you come and be a non-exec for us?
So when you say like distribution for you, that's getting your service in front of clients, is it?
Yeah. So it's professional connections. It's helping with a marketing plan. It's charming. It's going out and meeting, lawyers, accountants, lots of different businesses who have clients in common with us, and doing that, because these relationships take time to nurture, and I don't have time to do that and run the business and look after clients. So that was the bit that he was doing.
So when you take on a non-executive director, you don't pay them a salary as such? Well, you can pay them a salary, can't you? You pay them like a non-executive director salary. So the difference between being a director in the business and being a non-executive director, what's the difference in respect of shareholding then?
So the non-execs that we have in the business and are bringing into the business have a shareholding. So I'm too tight to pay them. Essentially. My view is we should all want to see the business succeed. So effectively, you become a NED, you receive a bit of equity, and then we're all, that's what you get.
Interesting.
So all of them have some equity, and that way we're all aligned. We all want the business to, the easiest way to have a financial planning business fall over is not to have good behaviors and good client outcomes. So we all want the compliance to be right. We all want good client outcomes, and we all want to see the business grow.
When we look at the distribution side and the impact that he's had on the business, has it had a positive impact through the professional connections and opening up opportunities and bringing clients to you?
Yeah, absolutely. Yeah. I mean, it's I could quantify. I've not looked at it in terms of, I've not looked at the spreadsheet. I mean, we have a spreadsheet, so I'm big on MI. So we have a spreadsheet that's kind of, these are relationships that Gary manages. These are the inquiries that we've had. These are the ones that have converted to business. Or rather, these are the ones that we've then met after speaking to them, and then these are the ones that have converted to business and are now clients. And it's a number that I am more than happy with.
Do you feel like sometimes when you have a non-executive director, and if, say, for example, you feel they don't pull their weight, do you feel uncomfortable in approaching them and talking to them about the level of contribution to the business, or have you not had that problem?
Not had that problem. So we've had that. So we've got Gary. We've got another amazing woman called Laura Bruce, who's a non-exec as well. And I met her when so I did a UK government-funded university short course called Help to Grow, and she was my mentor on there. And I had 10 mentoring sessions with her as part of it. And at the end of that, I said, "Look, I'd really like to carry on working together. This has had an immediate impact on the business already. How can we do this?" And she said, "Well, you can either pay me my hourly rate, or you can come up with something else." And I said, "Well, why don't you become a non-exec and then be more in the business?" And both of them I've got more than I should out of them. There's bits that where we've joked in the past, and they've said, this isn't really NED stuff anymore. This is like actual employee stuff. But we all want the business to do well, so we'll do it.
And with a NED, for example, you make an agreement for. Is there like, you're going to dedicate so many hours to the business, or is there a commitment to being part of like a directors meeting or something like that? How do you quantify what it is they actually do?
So we have at the moment we have board meetings monthly because as you said, we're rapid growth. If you left it quarterly, it'd be a completely different business by the time we have the in between meetings. I'm famous for walking out of one meeting, then a week later following up and going, we need to have another meeting because we've been approached by a really good advisor that wants to join us. So you don't meet for a quarter, and God, it'd be Anyway, so we have monthly board meetings, which were sort of 100% attendance, and then generally I will speak to Gary and Laura independently, sort of probably once or twice a week on top of that. Laura's great on the management accounts, and so I've been keeping pretty good management accounts and forecasts, and then she got hold of it. So her day job is working for it's a Scottish debt fund, and she does investment analysis all the time, and arranges debt funding. So you send her a set of management accounts, and they come back in perfect order and looking very sensible. So she's great on the detail, and so frequently, if I'm thinking about doing something, I'll ring her up and say, what about this? What do we reckon? And I'll get an hour on the phone with her.
Yeah. So it's very valuable to have this non-executive team, and I think I don't have that. I've got myself, my fellow owner, business owner, and then I've got a director within the business. Externally, I don't have nobody to bounce my ideas off of, nobody who's been there, done it, got the t-shirt, who can give me some advice. And it's definitely something that I think, within my recruitment business, I need it now. I need this kind of mentor guide, if you like, or someone I can lean into with a level of expertise that I don't have. And what I'm looking for is foresight. I'm looking for somebody who's built and sold a business, who can look at my business and say, Sam, you need to add this to it, or you need to focus your energy on this area, or this area is doing really well, but you need to, just to give me these prods and pointers. And I'm very interested in this non-executive director side. And I think if more people understood how to approach NEDs and how to structure it in the right way, I think people would probably benefit from it hugely. And it can be done in the early stages of a business as well, because you're giving up equity as opposed to giving them a salary, right?
And I mean, that was quite risky as well, because like giving up equity early on is a lot of people say, God, you shouldn't do that. But actually, I'm not in this. Yes, I hope to at some stage, when should I exit the business, which might be to an employee ownership trust, it might be to a third party or whatever. I hope to be comfortable, but actually, I don't need to. I'm now not apparently having children, so I don't need to leave anything to anyone. So actually, what does it matter if a Ned gets a percentage point or two of equity, and then that makes a material difference to their life, and their contribution to the business is recognised. And likewise, if we keep going the way we're going, we'll probably do some growth shares for and share save schemes and things like that at appropriate times, because we want the people who are in the business every day to get some sort of benefit from the growth as well.
What would you say is your sort of one area of the business at the moment that you would want to improve upon? So an area you feel that if you had a level of expertise join your business right now, that it would catapult your business forward?
Well, so we've got another Ned joining, who we can't name yet for legal reasons, not because they're in court due soon or anything, but just because we're finalising the paperwork, and the things have to be done in a certain order for equity and things like that. But they, so there's the BD and the professional connections bit that Gary does extremely well, but then there's a sort of wider marketing piece and PR piece. We've got someone coming in who we're really, really excited about, who will help on that front. So it's strengthening that bit, and the being able to push a message out to say to people, because now we spent the first couple of years working on systems and getting systems right and things like this, so we didn't actively seek new business. There was enough there to pay the bills, and we were kind of, look, let's get things right before because we all, as we said, the growth we're seeing now is slightly terrifying. So, but and things still, the systems still aren't perfect now, but we're good enough to be able to do this. And they will be. Nothing is ever perfect, but they'll be as closest as they can be soon. And the new person coming in will help us get the message out that we're here and we're able to help.
So structuring the branding, the marketing, the positioning of it from an talent attraction perspective, but again, so ticking the box in respect of hopefully more clients see you as more of an accessible type of service, easy to use, but also that other advisors start to hear more about you and think about potentially joining your business, that kind of thinking.
So actually more the sort of first one about organic growth. So we were in a really good place with the kind of advisors joining us, touch wood. So Gary, the other bit that Gary does is, Gary spent a career in distribution for investment businesses. So, he quite often will say he'll get a phone call and somebody, oh, so and so's thinking about selling the business, you should give them a ring.
Yeah.
This. So we and 4 of the advisors in the business have come because of Gary's contact.
Yeah.
So we're okay on that front. And then what we're actually finding is we've had 2 referrals from the first advisor that joined the business.
Yeah.
So he's like, this is actually really good. I'm enjoying working here. These are good guys. And he's referred 2 other people to us who we're now looking at joining sort of back end of next year.
Yeah.
So
Lovely.
it's really that organic growth, because we seem to be on a good track with the people joining the acquisition piece. But actually, you need to balance that with organic growth, because otherwise you end up taking on a load of debt to buy these businesses. And then effectively your business becomes worth the same amount of the debt because you've just bought, you know what I mean, if you've not got any organic growth as well. So I think making sure we keep the organic growth ratcheting up as well.
I think really smart move with the non-executive director from the distribution side for that very reason. I think there's some really talented, well-connected BDs and things that work for the product providers that if they did step away from that or they were retiring and they've been doing it for years, their black books are huge.
Yeah.
And they've built advocate relationships. They've built strong relationships with those people. And if all of a sudden they can turn around and they know who's got assets under management, they know who's closing in on retirement, they know the personalities because they dealt with them day in, day out for years. I think that's a really smart move to bring on those types of people as non-executive directors. I love this approach of non-exec directors. It's something that I want to do, and I haven't done it. And it's something that I want to eventually end up being as well. It's like if I either set up my own financial planning business and I partner with a couple of financial advisors and we build a business, and my skills and expertise is the marketing, branding, recruitment piece and the academy side. That's what my strength is. That's what I have. And that's a hard part of building a business, right? Is talent attraction. Or I quite simply align myself to a financial planning business as a non-executive director and bring that skill set along for an equity or for something and be a part of the growth of that business, because there isn't a conflict of interest if you're honest and upfront about it. So it's an interesting avenue, and I could think a lot of financial planning businesses that are smaller like yours could benefit hugely from doing the thing that you've done. And it's a confidence thing. You've done it confidently by giving up equity. And I like your approach. It's like, well, you got to be in it to win it, right? You've got to surround yourself with those experts, those great people, because you've got the self-awareness to recognize that your skill set doesn't lie in going out and winning those. And you can't do everything, You can't do everything. It kills you. It blows your brains out after a while. It's so difficult to do everything. Yeah. And I think that the non-executive director route is a really good way to get an expert on board without the need of having to employ him, especially if you can do the equity side of it. And what's equity if you're going to make a load of money in the end anyway?
Yeah, and I think that is the thing. Money is not my primary driver for this, and that I think that's the other thing that sort of shines through when I'm speaking to people. It's like there's a difference, but there's little difference to me between this much money and that much money. It doesn't, and that's I came from a very modest background in a mining village in Yorkshire. It's not that people see me on Twitter and things and think I'm this giant posho, but genuinely, I don't come from much, and it's that thing of if we can just do a bit of good. This profession's amazing, because if you do the right things and help people, you will be well remunerated for it, and they will get a load of value from it. The client will be happy, you'll be happy, and you don't actually have to charge astronomical fees. You don't have to tear the arse out of it. You don't have to treat people badly. It goes back to that no dickheads thing. If you just treat people as you would want your grandmother or mother to be treated, they will get value and benefit from your advice. You will be fairly remunerated, and that's fine. And then let's all go to the pub and
Well, there is definitely 100% a market out there that needs to be serviced. There's a shitload of people, a shitload of clients that are going to need financial advice, even more so over the next 10 to 15 years. There's a distinct lack of financial advisors. There's a whole load of them exiting out of the industry and not enough of them coming in. So the one thing is, if you're in the game now, right, and you can offer a fantastic, affordable service that's transparent, clear, and easy to do business with, you've got the millions of people to give advice to. There's nothing stopping you from building a fantastic business at value as well. You don't have to be stitching people up or ripping them off, do you? Yeah. You can be fair. And as long as you build it and grow it, and I think that fairness and transparency and honesty there, and I think that people coming into the profession are more so than ever aware of honesty, transparency, value, then I think you're onto a winner. So, Tom, I'm going to sort of draw it to an end there because we've been talking for quite some time, and you know, I know you've got another meeting after this. So, listen, it's been a real pleasure talking to you, and I obviously wish you all the best with your business. And if you're looking for a non-executive director on the recruitment side, just give me a shout. But listen, thank you so much for your time, Tom. Really appreciate talking to you.
No, thanks for having me, Sam. No, thanks very much. Have a good one.